The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy Thursday morning, everybody. As our friendly announcer there just said, I'm Kate Stalter. This is the Small Cap Roundup. Busy week around here in Small Cap Roundup land. We have just launched the low price leaders. Actually, last week it went out for the first time. Our second one went out just last night, as a matter of fact. And if you have entered your information to get some more details about that on the TFNN.com website, you will have gotten an email from Mike at TFNN with an update on some buys and sells. So I'll be doing that throughout the week as market conditions change, which they have, perhaps, and I'll talk about that a little bit. With yesterday's upside action and heavier volume across the major indexes, and I'll talk about that a little bit today. But as that changes, or as there are buys or sells or additional things to watch out for on some of these lists that we are sending out in the newsletter, we'll be sending you some updates on those throughout the week. So if you've already signed up on the TFNN.com site to get more information about the Low Price Leaders newsletter, to get a sample, we are sending out some samples these days. You will have gotten an email from Mike this morning telling you about a stock called Omnova that I did take a position in. I'm going to talk about that in a minute. So just to set the stage a little bit, tell you what we are doing here, the Low Price Leaders newsletters features top performing stocks that are priced between $5 and $12. And these are stocks that are showing strong technicals, good buying, good price increases, volume and moving average support. I don't buy, generally speaking, as a stock is trending lower. I will buy at moving average support. I tend to be, however, a little bit more of a conservative investor. I know some people, when they buy at moving average support, they will buy, for instance, on a day when the stock is trading lower, and they'll step in there to scoop up shares on the dip. I'll buy on the dip, not necessarily as a stock is literally at a previous high or a new high. However, I want to see, I prefer to buy on a day when the stock is at least showing some gains, either intraday or for the entire session. So you'll see how that works, not only in the stocks I talk about here on the show, but also in the newsletter. So we're looking at in the newsletter a couple of different categories of stocks. The first is stocks priced between $5 and $12. That is just a particularly productive area in terms of where some of the institutions, mutual funds, some of the smaller mutual funds will begin to look at some of the $5 shares, some of the hedge funds, and a number of advisors who do tend to buy a lot of shares, who operate a lot of larger separate accounts. So you will see that $5 level begin to attract more professional buying up through $12. Now, in particular, in that area, in the $10 through $12 area, is where you do see a lot of stocks really begin to accelerate their uptrends. So that's why I know a lot of low-priced stock newsletters will stop at $10. That 10 to 12 area is not something I want to neglect, because it's a place where sometimes if people are running screens, or again, some of the big institutions will maybe step in above 15, 10 to 12 is an area you'll see quite a bit of buying, where, again, institutions begin to recognize the potential in some of these names. And let me just do this here. I want to put up a chart just to show you an example. And I've talked about this a couple times. I talked about it with Tom the other day. This is a stock that I do have on the newsletter right now in the small cap section of the newsletter. In other words, stocks priced above 10 to 12. I do 5 to 12 rather. I do include a number of the small caps in here as well. The show, after all, Small Cap Roundup, so we want to work some of those into the newsletter. This is Anika Therapeutics. And this is a stock. They make treatment for cartilage and bone disorders. I've been talking about this one pretty much the whole time I've been doing this show. We started this back in December, and I think I've mentioned it at least once a week, every week since then, with good reason. This is a stock that actually, an original buy point on this one would have come way back around the $8 range. I don't have it exactly in front of me, but right around in the $8 range, maybe around $7.50 or so. And you see what's happened. It has continued to rally higher, is now trading at right around $16. So this is a perfect example of one of those lower price names that did attract gradual institutional support. Now, you know, one of the things about Anika, and this, again, is very representational of what I'll be looking for, the company is turning around its earnings performance, actually beginning in the second quarter of 2011. After some earnings decline. The company showed an earnings decline in 2010 from 2009, and then has been ramping up earnings growth since then, expected to show earnings growth more than 25% in each of the next 2 fiscal years. Revenue growth has been trending a bit higher. Revenue growth has been pretty good all along. I think there was one quarter about a year ago when it was flat, but revenue has been growing at a healthy rate. And, you know, think about it a little bit. Healing bone and soft tissue, I don't make buy and sell decisions based on qualitative trends, but certainly as background information and something to think about, and when you're looking at what is driving success in a company or a stock, you know, bones, connective tissue, healing, aging baby boomers out there running, skiing, playing basketball, trying to do a lot of the same things that they've always done. You know, you have a very good market there for these products, and that's continuing to grow. And of course, the medical sector, the biotech, biomeds, all of these in general, just technology has always been, of course, a leading growth area. It's been a very productive area for investors. So, of course, the biomed, biotech area, ripe for new technology. I think people think it has to involve software and chips. No. Technology is very, very alive in the medical field. You know, it's kind of funny because if you think back what technology is, well, all the way back to what? The Gutenberg printing press, right? That was the advanced technology of its time. That was the Facebook of its era. So, you know, obviously I think Anika Therapeutics, a little more advanced than that, but just making the point that these new innovative developments really do drive investor growth. They drive demand, and that's what attracts the institutional investors. So anyway, that is an example of the kind of stock that I will be looking at, something that starts out in low price land with good fundamentals, good track record of sales, indicating there is demand for the product or service, and the stock can rally and become quite a leader. So this one is featured in the newsletter this week on the low-priced leaders. It's featured in the small cap section. It's consolidating right now. Not really ready to offer a new buy point. It needs some time to consolidate. Let me show this to you on a weekly chart. And let's see, there we go. It's updating if you're there on Tiger TV. So you see it did have several weeks here in a row of upside trade. Kind of got a little fast paced, so it needs some time to consolidate. You know, sometimes people ask, what's the purpose of watching these names that have already rallied to new highs? Isn't it too late? I think that's kind of the way that many, many of us have been conditioned over the years via conventional wisdom about investing, is that you want to find something that is beaten down, priced lower, that if it's already rallied to these new highs, it's not worth watching anymore. Well, au contraire. Absolutely, these are worth watching. It does show you that there is that track record of institutional support. They're tending to hold shares right now. Held up pretty well, even as the market itself was correcting. Needs a little more time to consolidate. So we will continue watching this one. This is a stock I like a whole lot right now, just in terms of what the technicals are showing me, as well as the fundamentals. Never get too attached, never get emotional. It can fall apart at any time, and when it does, it'll fall off my screens, and it'll fall off our watch list. So I've got a few more minutes here. I want to just talk to you a little bit about the market outlook in the low price leaders this week. I was writing this before the market closed in Wednesday's session, so it did look like we were getting some heavier volume on the major indexes. Did turn out we had a gain. I put the SPY up there, the S&P 500 ETF. And what actually ended up happening on the S&P 500, you had a gain of about 1.4% yesterday. It's pretty significant. You did have heavier volume than in the previous session, so that's an indication that investors were jumping back in. And, of course, what drove a lot of that? Our friend Apple. So, just to keep that in mind. But there were a lot of other of the leading stocks, the better price performers that did show gains. But, keep in mind, a lot of that was due to Apple. So you always have to be very, very cautious when you do see that kind of action, not get too jubilant. It's a balance. It's a fine line between saying, okay, the market signals are showing me that institutional investors are back in, showing more confidence in the market than they had in prior sessions. And, of course, that Apple report had much to do with that. You had a little bit of up and down trade after Bernanke was speaking yesterday, but really, most of the big move yesterday can be attributed to the Apple earnings report. So just keep in mind, if the signals do reverse lower again, if you do see selling picking up, that's going to be a sign that investors, institutional investors, have decided perhaps this rally, they're not ready for the new rally. It was just a little bit of emotional trading over Apple. That's entirely possible. When you see one of these market signals of significant price gains on heavier turnover, if it's going to fail, if the new uptrend is going to fail, usually it happens within the first few sessions right after that. Now, so far today, markets do appear to be hanging in there. We have some lower volume, I believe, last I looked, but gains across the indexes, so that's fine. We're not necessarily looking for heavier volume today to reconfirm it. So far, so good. We'll come back and we'll take a look at some of the other stocks I have in the current edition of Low Price Leaders. I'm Kate Stalter. Give us a call, 877-927-6648. Be right back after this little break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right, welcome back. I'm Kate Stalter. This is the Small Cap Roundup, Thursday edition. We're here every Tuesday and Thursday, 11 a.m. Eastern. So, the big news here in Small Cap Roundup land, TFNN.com, is we have launched last week the Low Price Leaders newsletter. So I'm talking a bit about that today and some of the developments over here that are going on. So I was just, before the break, talking about the S&P 500 and just despite some encouraging action if you are a bull. And by the way, I'm neither a bull nor a bear, just following the trends, seeing where the market leads. So the current action here today, we've got markets higher across the board. Looks like volume a little lower. Not necessary to be watching for heavier volume again today. But what you do want to watch for is selling that occurs within the next few sessions, heavy volume selling. I'm not just talking about any downside day that shows a bit of a moderate pullback in normal volume or even lighter volume. That's to be expected, naturally. But if we do see a heavy volume pullback with significant losses on one of the major indexes, that gives you a sign that, hey, this fledgling uptrend following the Apple report could be in jeopardy. So just keep that in mind, something to watch out for. Okay. Wanted to show you, I mentioned at the top of the show that if you have signed up on TFNN.com for a free edition of this Low Price Leaders newsletter, and if you haven't, please do. No obligation, just to take a look at it and see what we're talking about there. I can assure you there will be a lot of stocks on there that you're not going to hear about in the mainstream financial press. These are obviously many of them do tend to be more thinly traded, so they can be a little riskier, but they're not among the big holdings in some of the big mutual funds that you're going to be hearing about over and over and over again in the dividend craze that we had in recent the past year or so. And I'm being a little facetious because in one of my other accounts I do hold some dividend stocks and some dividend ETFs, so I do understand the need for holding some core positions in a portfolio. But these are names you're not going to hear about. Let me show you one that I did buy. This was the update you would have gotten from Mike at TFNN in your email if you have signed up to get more information or take a free look at the newsletter. This is Omnova. OMN is the ticker, and I want to put it up here on a daily chart because that's going to be a little bit more instructive. Now, I've been talking about this one for a few weeks. It's offered a few buy opportunities lately, to be sure, but it did just offer one recently, and that is the one that we updated you about this morning. Now, this stock, I've got a daily chart of it up there on TFNN, on Tiger TV. Now, this is a chemical company, and, you have to be concerned with chemicals because some of them do tend to show some volatile earnings. On a fundamental basis, though, this one has been a good performer. And, again, we've seen earnings increases, let's see, in 2010, in 2011, more earnings increases on a yearly basis expected this year and in 2013. So, of course, as I say almost every show, analyst estimates can be wrong. However, it does show you the degree of confidence that institutions have in a stock at any given time. Worth a look. So you see here where I'm indicating the stock rallied to a session high of, let me see, that was 758 back on Friday. Okay? Then it pulled back a bit earlier in the week. Now, in that pullback, it held right at its 20-day line. So not too bad. That's actually some fairly bullish action, despite a pullback. A pullback, obviously, as all of you know who are listening to this, can be constructive, does not necessarily have to be devastating to a stock. So it bounced off that 20-day. I did go back into it when it crossed that 758 threshold again, which would have been yesterday. And now, let's see, it's at 784. Now, let me tell you right now, actually, let me get you a more up-to-date, I think what I was looking at right there. Bear with me here. Yeah, it's at 787. 787 right now. So because we sent out an update on this one as a current buy, I want to finish talking about this a little bit after the break and let you know you do have a little bit more room to get into this particular stock. So I will finish up with that thought after this break. I'm Kate Stalter, 877-927-6648. Give a call. We'll be right back with the Small Cap Roundup.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back to the Small Cap Roundup, Thursday edition. Okay, so I wanted to just finish up what I was saying about Omnova here. I'm not sure how you pronounce it. Omnova, I don't know. It doesn't matter. It is trading as of now at $7.87. It's in buy range up to $7.96. I have put in the first stop at $7. However, occasionally, if there's very, very poor action, and depending on moving averages, I might sell below that level, rather above that level. I apologize, above that level. Now, right now, we are looking at 20-day support at $7.17. So if this thing, as it does rise, obviously that stop can change a little bit. If you're looking at something in between that $7 and $7.17 level, you'd have to evaluate it pretty well to see. Now, I know in a lot of, you might hear folks talking about cutting your losses at maybe 7%, 8%, even less, 5%, 6%. With these smaller stocks, the more thinly traded ones, you often have to give them a little bit more latitude. That if you try to sell, cut your losses at 7%, you're going to get just shaken out in a heartbeat, and you're going to get very frustrated. And I know this because I've made all these mistakes. I've tried that. I've had some of the small caps that I've traded over the years, the thin ones, and just kind of had to learn that with a more liquid name, you really should get out of there. A 7% loss is something below your buy point. I should make that clear. 7% below the point at which you purchased. That is really going to be a very wise risk management strategy, and you always need a risk management strategy. So, with the lower priced, more thinly traded names, you need to frequently give them a little bit more latitude. So this one is trading about 200,000 shares a day on average right now. That's thin. I consider that thin. So you really got to be very careful. However, right now it is continuing to trend higher. Watch for it, before it reaches that 796 level. With a lot of these smaller names as well, just that don't have the institutional ownership of the bigger caps, they won't get as much trade. They're not as liquid, which of course also means you don't want to be shorting these things. It might be hard to get the shares. So it's this is something that is definitely not what you want to be looking at in terms of a short. You really just want to get out of this if you do see something that indicates a lower trend. Okay, so what we're talking about here is looking at Omnova. I want to go over some more of the stocks from what we have in the Low Price Leaders newsletter right now. We do have, let's see, here's one that reported, this is the one that I wanted to talk about that did report earlier this morning. This is ticker INOD. Let's see. Okay, INOD. Okay, let's see. There we go. Innodata Isogen. And this one cracks me up. I wrote in the newsletter that the name sounds like a biotech. I just think it does. But they are one of these business services outsourcers, and I wrote about a number of the business services outsourcers, not this one, but some other ones, for an article I did for Real Money over at the Street the other day, because as companies are more and more looking to offload particular business functions and have more functions performed by contractors or outsourced companies they hire, rather than bringing in full-time staffers as they might have done in years past. A lot of these business services, business process outsourcers are doing particularly well. So this one does provide services to various publishers, media companies, government agencies are big clients here. So what happened here, let me just pull up, I've got the chart up there on Tiger TV. So this company reported actually before the bell this morning. Now this is interesting because before the show I had checked and it looked like on okay, there we go. So what you're seeing up here on a daily chart, you do see that it rallied following the earnings news and then reversed. So not particularly liking that action right now. That reversal doesn't necessarily mean that the stock is going to fall off any of my watch lists. Not at all. Just in terms of when you might want to make a buy decision on this one. It is actually, it is what I would consider to be in a buy range at this time. It's kind of holding above some intermediate resistance right in here at about $5.62. It's holding right now at about $5.76. So this is one, I really want to give this a little more time to trade today. possibly even give it a few more days before I make a decision on this one. This is one that is just going to be on a day-by-day basis at this point. But I do like it. I do like that it got a little pop this morning. Not unusual. You do see often some profit taking after an initial pop like that. You do see that you do have some traders who jumped in here, perhaps at a lower price. Have been holding on for a relatively short period of time, not day traders, obviously, but some who have maybe a short to medium term horizon, perhaps some of the swing traders, and there are some smaller. They call themselves hedge funds. They don't really hedge technically. A lot of hedge funds don't, as a matter of fact. But this could be an example of one of those people who are just taking some profits, who jumped in ahead of that earnings report. So nonetheless, I think this one's still looking good, but want to just give it a little more time to play out. So what I want to do, just kind of look over some of these names that we are featuring. Here's a very interesting one. It's called, let me get this in here. There we go. Regions Financial. Ticker is RF. Okay, Regions Financial. And this is regional bank, as the name kind of suggests. This is a stock that I've also been watching. This was in the first edition of the Low Price Leaders newsletter. So this is trading right now at about $6.68. Actually, let me go over here. And I've got about 4 different screens going on here right now at any one time. $6.68. So what's interesting about that is I was looking at a chart that had I believe a 15-minute delay, and I went to a real-time stock quote, so we're still at $6.68. And that is what happens on a number of these stocks that are fairly low price. They just they don't necessarily move as much as some of the others. Now, the interesting thing about this one is you do have enormous volume. This did not used to be a stock that traded in the single digits. So you have a lot of the institutions continuing to hold on to this stock. Let's see, volume of 28 million shares a day. Yeah, see, that's interesting. And you've got a lot of the investors and traders that do like to just hold on to these regardless of how the price does drop. I'm not one of those, but you do see that quite a bit. Now let's take a look at what's happening here. The stock had been hitting some resistance, and it's about to clear that resistance at $6.69. So it's right there. It actually passed that intraday today, $6.77. So this right now is within buy range. And I'll tell you a couple, there's some pros and cons on this one. Obviously, the price and the earnings performance on this one looking very, very good. The revenue, and I do make some exceptions to some of these revenue-driven stocks. I do tend to look at, in the financials, some of these regional banks, you have some different issues going on. Really, looking at the earnings performance here, this one expected to show some triple-digit earnings growth in 2012, double-digit in 2013. Really liking this very recent little area of consolidation on the chart. I want to show it to you on a weekly basis. So this is very, very much in the range of one that could be a buy candidate a little bit later today, and you may be getting an email from TFNN if there is a buy decision made on this particular one. This is interesting. It's at 666 right now. So you want to maybe some people who don't like that particular number would like to see the stock move a little bit above that one. But it is in buy range right now. Remember, wasn't it? Remember back in March of 2009, you did have that 666 low. Remember that? And then the indexes did rise after that one. On the S&P 500, 666. It was actually 666.79. but definitely stood out in my memory. So there you go. So that's Regions Financial. I like that one. I may well be sending out an update on this one later on in the day. I'm not necessarily going to be grabbing the trade mid-session. Sometimes I will. Sometimes I'll wait till the close of trading to see how the stock does perform throughout the day, whether it does reverse lower, whether volume picks up to the downside, that kind of thing. On this particular one, I do think I want to wait because I am noticing it's off some of those highs. I just want to see how it plays out throughout the remainder of the day. Now, I put another one on the newsletter here, and I'm putting up the ticker WAL, Western Alliance Bank Corp. This is another regional bank, and I got to say up front, I don't necessarily advocate getting too heavily into any particular sector or subsector. You don't want to get slammed too much, because obviously there could be industry-wide news, economic news, where the financials are concerned, that can slam the entire sector, and you can really find yourself in trouble if you are too heavily weighted in one area. And of course, with these smaller stocks, I don't recommend being too heavily weighted in many of these anyway. Now, this is this actually has much lower daily trading volume, about 400,000. Market cap of about 746 million right now. I'm liking the consolidation right here. You notice that nice little flat, essentially sideways area of trade, holding very nicely above the 50-day moving average. Now, when you are looking at some of the shorter term averages right now, it's holding above both its 10-day and its 20-day line, has yet to clear the resistance on the top there at about $9.20. I would kind of give this one a little more room to continue working its way out of that consolidation as well. So that is something right there that take a look at. Right now, I have to admit, if I have a favorite of those two, it is Regions. Technically, it is looking a little better. It's a close call, though. It's a close call. So let me just take a look here. I know I put in the newsletter what the situation is on earnings, because with all of these stocks, with any stock really these days, the earnings news is absolutely something that can have an effect on how the stock is traded. This one reported on April 19th, and if I go back to a daily over here on Tiger TV, okay, so there I'm indicating, you see that had a nice big move up. Then it did reverse lower. It gapped higher, reversed lower, and has just been kind of bobbing around the 50-day line there in the last few sessions, for a couple of sessions there, then gapped higher again. Not atypical in these small, lower-priced stocks that really maybe not on the radar. You do get some odd trading patterns, but nonetheless, continued good support above the 50-day line, so really nothing there to complain about. This is another one. Let me just talk about the fundamentals here for a moment, just to indicate that there could be some good potential here. You had an earnings turnaround in 2011 after a loss in 2010, nearly double. Earnings are expected to nearly double this year and rise again about 38% in 2013. So some good fundamentals and technicals. So you got a couple of the regional banks there looking like some good candidates, and I will be updating you on those, most likely. All right, I'll be back. We have one last segment here on the Small Cap Roundup right after this break.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Last segment today of the Small Cap Roundup. I've been talking about the Low Price Leaders newsletter that we have recently launched here. And if you have not gone to tfnn.com, and just put in your email if you want more information, if you want a free edition, no obligation, just to familiarize yourself more with what we are doing here. Please do that. Let's see here. We had in the chat room, Angie, I believe it was, posted IWM, which got me curious to see what that was about. I had been looking at it a little earlier today. I just put a quick chart of that up on Tiger TV. What's now, obviously, some good action. You had a heavy volume gap higher yesterday in the Russell 2000 ETF. One thing that I am looking for, and this looks like it's pretty likely to happen soon if we continue along current trends, would be for the shorter-term 10-day moving average to cross above the 20-day moving average. I like those shorter-term moving average crosses. Very, very simple technical indicator that can be a confirmation of strength, and, in some cases, sort of an early indicator. So that's one I'm kind of looking at. But obviously, yes, I am encouraged by the action here, and of course, you're not going to have as strong a performance maybe because this doesn't contain Apple. So there you go. Maybe Apple should just be in every index, regardless. How would that work? Okay, I want to go back to some of the stocks we have here that I'm taking a look at. All right, here's a very interesting one, and I'm going to get a ticker up here for you. It's called Arabian American Development. ARSD would be the ticker on this one. Now, this company is not due to report until May 3rd. So that's coming up. Is that maybe next week? Probably next week sometime. So we are in that little time frame here ahead of the earnings. I really like this consolidation. I'm showing it up there on a daily chart on Tiger TV, ARSD. So this one is currently priced at, at about $10.34, market capitalization of about $248 million. So really liking what it's been doing here in recent days as it's pulled back a little bit from a prior high. Let me also show it to you on a weekly chart. I use both daily and weekly to make the decisions here because the weekly chart shows you the overall trend. The daily chart really does give you more granularity into potential entry points or exit points. I also do use intraday, and I don't know, maybe that surprises people because I am not a day trader, but I do like intraday charts because it can give you an indication of trends that also can affect your decision. For example, as I mentioned a few minutes ago, if you do see a stock that gets a nice boost early in the session, but then as the session wears on, you do see it begin to pull back, perhaps in heavier volume, that's not a great indicator, and it may be a sign that you want to wait to take a position. So I do like this one. I'm looking at the recent high of $10.90. It is hovering in that area. So this is another one. I'm really hesitant to jump in ahead of earnings, though. I don't like to do that. So that's why I'm waiting on this particular one, but we'll be tracking this one over the next week. So far, it's got a good history of trading. Looks like one that we're going to continue to watch. Okay, that's a wrap for today. I am out of here. Look for some possible updates from TFNN on some of these stocks in terms of new buy points, and I will be back here on Tuesday. Have a great weekend, everybody.